Welcome to the TAC Index AI podcast. We're the place where we blend TAC IP data, all those reports and charts, with the latest news and logistics, really focusing in on air cargo.
Yep.
Today, we're doing a deep dive into the very dynamic world of air freight. We're not just looking at numbers today. We're trying to sort of crack the code on these shifts we're seeing.
Right.
Exploring how the latest TAC index data, global economic stuff, even geopolitical events, how they're all shaping logistics and, the broader macro market. It's complicated for sure, but we'll try and unpack what's most important for you.
Exactly. And we'll be, connecting those dots between the air freight rates, which can seem all over the place sometimes, and the impact of things like jet fuel costs and those bigger economic currents influencing supply chains everywhere. We want to get beyond just the figures.
Understand the why.
Understand the why. What do they actually mean for how goods are moving?
Okay, so let's kick off with those latest numbers from the TAC index. They really do tell a story. The Global Baltic Air Freight Index, BII00, that's our kind of global benchmark. It edged down just a little last week. 1.8% week on week, still down a bit compared to last year, about 3.5%. So on the surface, you might think, okay, global spot rates are holding pretty steady.
Right, but that's just the surface.
Right.
What's really fascinating, I think, is when you look at the regional differences, the dispersion.
Yeah.
So while overall rates didn't change much week on week from China out to Europe and the U.S., the Trans-Pacific lanes specifically are actually down pretty significantly, more than 10% year on year.
Wow, okay.
Yet, if you look at specific hubs, outbound Hong Kong, that's BI 30, it actually gained 1.9% week on week. And Shanghai, BAI 80, only slipped like 1.0%.
So very different stories depending on where you look.
Exactly. It really begs the question, what's driving these very localized shifts? It's like a regional supply and demand game.
It really makes you wonder, doesn't it? Because Europe was also quite a mix. Frankfurt, BAI 20, that gained 1.4% week on week, and it's solidly up year on year, 7.5%.
Okay.
But then you look at London Heathrow, BAI 40, it gave back some gains it made recently, dropped a pretty big 10.5% week on week. Though, like you said about Hong Kong, it's still way ahead compared to last year, up 21.1% year on year.
Right. Still strong yearly performance there.
And then here's where it gets really interesting, I think, especially for supply chain folks. Out of the U.S., Chicago BAI 50, it just took a nosedive, plummeted 17.6% week on week.
Wow, 17.6.
Yeah, and it seems to be dragged down mainly by a steep fall on lanes to Southeast Asia. It's now down 21% year on year on that index.
Okay, so that's not just noise.
No, these aren't just abstract numbers. That Chicago drop, for example, it feels like a clear signal. Maybe supply chains are diversifying, or maybe consumer demand patterns are shifting away from goods typically moving through there to Southeast Asia. Something's changing.
And if we connect those specific freight movements to the, let's say, the bigger macroeconomic picture, you start to see these wider forces.
Right.
Like the recent Fed minutes, they showed, broad support for holding interest rates steady for now, between 4.25% and 4.5%. Now, that stability, or maybe the lack of expected cuts, that directly hits business investment, consumer demand, which, feeds right back into shipping volume.
So businesses might hold back on big orders, consumers maybe spend a bit less?
Exactly. It affects what actually needs to be shipped. And interestingly, there were even sort of disagreements among the Fed officials about how tariffs, import costs, might be playing into inflation. That's crucial for the macro outlook and for businesses trying to budget.
And speaking of global factors hitting logistics, oil prices, they just fell.
Yeah, saw that.
Brent crude futures settled down at $65.79 a barrel. That's down 1.22%. And U.S. West Texas Intermediate, WTI, down 1.69%.
And the drivers seem pretty clear.
Yeah, it talks about potentially easing sanctions on Russian oil if, and it's a big if, discussions to end the invasion of Ukraine make progress.
And that, of course, flows directly into jet fuel costs, which is a huge slice of air freight pricing, a major headache for carriers.
Right.
So if oil prices kept trending down, that could offer some much-needed relief for airlines, for shippers, could influence rates.
Yeah.
It just reminds you, doesn't it? Even with all the tech, logistics still boils down to things like the price of oil.
Absolutely.
And we also saw, stock markets reacting. Nasdaq, S&P 500 fell a bit. Investors seem to be rotating out of tech. Maybe worries about AI stocks being in a bubble or something.
Heard that chatter too.
And moving into maybe less flashy sectors like energy and healthcare. And that broader market sentiment, that confidence level, that also influences cargo demand eventually.
So putting it all together, what does this mean for you listening, whether you're moving goods, flying them, or just tracking global trade? They've seen air freight rates showing this, well, localized volatility,
Yeah.
influenced by everything from those regional demand shifts we see in the TAC index data to the critical price of jet fuel tied to global oil and these bigger economic policies like the Fed's interest rate stance. It's just so clear air cargo doesn't exist in isolation.
No, it's totally interconnected. And I think this deep dive into the numbers, it really raises a key question for the next few months, doesn't it?
Yeah.
How might these ongoing geopolitical things like potential shifts in oil supply if sanctions ease, or big economic shifts like what the Fed does next with rates, how might those forces continue to reshape this air freight landscape and maybe logistics overall? Definitely something for you to think about as you watch these complex markets keep evolving.